our next guest, Atul Mehra, fund manager at Motilal Oswal Asset Management Company. Atul, thanks for joining in. We'll talk about your domestic stance and what you're liking in the market in just a bit. But let's talk about the big global risk at this point in time. At a headline market-wide level, I mean, we nicely started making some sort of a bottom. March was a good month. And now we've started April with a fair amount of volatility. Are you expecting further downsides because of these global issues, or do you believe that the bottom formation process was pretty real and durable, what we saw in March?
Yeah, it should be good afternoon. So the sense is, I think many times like you have a lot of these risks that emanate, but it's good to look at things in perspective. So if you look at India specifically, exports to US as a percentage of India's GDP is about 2%. Many of the crucial items like pharmaceuticals are very much needed, and they are the backbone of the US pharma industry. So to that extent, if we look at things in perspective, there will be a lot of noise as we head into the event. We've already seen that. But I would say that if you look at it from the construct of India per se, I don't think it really impacts. Maybe like a month down the line, you wouldn't be as concerned or bothered about this particular event as we see it today. So I think it'll make a lot of noise, but it'll pass by without major issues per se.
So it's like a thunderstorm which will pass by.
Yeah, absolutely. Yes, Prashant. So many times, we've lived through COVID, right? So now just look at this in perspective of that. It's very, very minor. There will be some industries, some companies which will benefit, some will be hurt. But I think 3 months down the line or something of that sort, India as a country, it's primarily domestic driven, and this will be a passing event in that sense. So also in parallel, our government is also negotiating a bilateral trade agreement. So whatever I would say negotiation has to happen, it is also happening parallelly to some extent. So I don't think it is as big an event as it's made out to be, especially for India.
Brave call, Atul. Good to hear that, actually. You don't believe that it's going to be that big a call. Atul, I'm looking at a couple of your funds, that you manage. And if I look at the large cap portfolio, it's pretty much in sync with what the Nifty has. Look at the large private sector banks, Reliance Industries. The top 7 or 8 is actually replicating what you're doing. How are you going to generate that alpha then? Because all those who are investing in your fund will want that additional return, right? So where's that going to come from?
So Nigel, happy to inform that we've completed about close to 14 months of the large cap mutual fund. We did the NFO last year, and so far we have generated about 21% alpha in the large cap fund. So it is. I would say that there are times in the markets where you need to protect capital. There are times in the market where you need to go for alpha creation. And clearly, in the last few months, we've become a lot more defensive. We've added a lot of defensive names in the portfolio, and to that extent, you're seeing in terms of some of the common names come by. But the way I see it is, in a full cycle, you'll have time phases where you will protect capital and time phases where you'll go for alpha. So at this point in time, it's more the former, that you kind of protect capital given how volatile the situation looks like.
Okay, all right. And kudos on that then, Atul, for bringing us that data point that you all have generated better alpha. You believe maybe at the time being, it's more prudent to preserve capital. Got that. Atul, one of the stocks that you all have largely overweight in comparison to the index is Trent. That's one of the top gainers today. And there's that debate out there, best behind or best yet to come. What's the view on this one? The store edition is something that the street seems to have liked. The stock, after seeing a big run-up, has cooled off close to 25% from the top. View on it?
So yes, we own it. While I can't talk a lot about the stock, but one thing I can say is, end of the day, you have to look at management teams which have an ability to, in terms of out-execute other peers. And we've seen that either in terms of Trent or either in case of quick commerce as well, for that extent. End of the day, the space is the same, but there are companies which are absolutely out-executing others. And Trent is clearly, I would say, one of those companies which has, in the past, executed really well on some of the formats. And in the future as well, they have a number of new formats that are in the making. and which we should likely see the benefit and scale of in the years to come. So, yeah, we are holders in Trent in many of our portfolios. We continue to hold it.
Okay, got that point. Overall, on financials, Atul, what are you doing? Because like March brought a lot of hope, and people were saying that maybe they can finally start taking a leadership space. But the problem is that they're so susceptible to FPI selling. Look at what happened. Friday, we had a big negative FPI sell number. Stocks were under pressure. Even today, we'll get to know FPI numbers in the evening. But the way in which large cap financials are falling, who knows? What's your call? What do you like here, and what are you avoiding?
So in terms of the call here is they are very reasonably priced. Businesses are doing well, and stocks are attractively priced at this point in time. I would say that like today clearly looks like a large FISL day, but I would say that the FIR numbers are also in the construct of what is happening in the rest of the world and so on and so forth. I was talking to somebody the other day, and there was a mention of a lot of global managers kind of looking to diversify at the margin away from US and starting to increase allocation to India. So what we've seen in the last 2 weeks is perhaps some reflection of in terms of some global managers kind of moving money towards India. So maybe today is a down day, but as a trend, I would say India is to some extent a derivative of the US market is, what something like Taiwan does, what Japan does. So it's a mix of a lot of things. But in like end of the day, like money will chase value, and in terms of many of the private financials are well-managed businesses trading at very reasonable valuations. So I think it'll come back after a point in time.
So Atul, what are your fresh ideas? What what are the bets that you've taken in the last 2 months? So give us some color on that. Even if you can't talk individual stocks, tell us the themes and the narrative behind it, which has attracted you to those stocks.
Yeah, yes, Reema. So basically, like I was mentioning, the last few months has been around protecting capital. So we have in our portfolio, in a large cap portfolio that I run, basically added a lot of defensive names across FMCG, across pharma, one oil and gas name as well. So basically, we are trying to make sure that in this volatile time that we've got into, we don't lose capital. And hence, most of the additions in the last few months have been around in terms of protecting capital. So that's been the key theme in the last, I would say, 3 or 4 months.
Okay, all right, Atul. More time at the pitch, so to call it, at the crease. That could be the call of the day for the time being. And once you get into perfect form and, weather the storm with regard to Trump's tariffs and the likes, then maybe move into aggressive mode. Thanks a lot for joining in, Atul, and filling us in with your take on how you see the markets pan out and the way you're investing as well at current reckoning. That said, well, it's that